Well, my previous life, I was with the Monetary Authority of Singapore. Um, Born and bred civil servant, actually. Didn't really think was possible for me to venture out. But lo and behold, the opportunity came knocking on my door. I was pretty intrigued by the opportunity to be able to start something from scratch. And that prospect of being able to reimagine the way we interact with financial industry, with the financial services markets, is something which didn't think it would happen for me. But when it happened, it was just such an exciting opportunity to be able to bring all the experience I had in my previous life, bring it over here to continue with what I think is the right thing to do, and create a new green market here. Yeah, so that prospect to me was something which really enticed me in making that decision to come here. Our journey started in 2018, and back then, crypto and virtual asset is definitely something that is coming up onto the radar of most regulators. The early conversations back then was very much focused around ML, FT risk, money laundering risk. And I think you can, if you look at some of the discussions and records back then, it's all about, how do we mitigate the risks. Uh, but for us, we recognize that the future of financial services is going to be technology driven. So the question we ask ourselves is, do we just want to think in a very conventional way, or do we think that in future there's a space where NewFi and TradFi will converge? So we spoke to various institutional players out there, get their views, and the conclusion that we got from them was, if we don't address all the risks that they see um, in the crypto space, they are unlikely to come in and invest in this space. Right? So these are traditional financial institutions and institutional players. So things like safe custody of client assets, market abuse provisions to ensure integrity of market, investor suitability and disclosures. All those things are very important considerations. So the long and short of it, in the end, what we did eventually was just to extend our traditional financial regulations into crypto assets as if it's just another asset class, right? Knowing that in future there's a possibility of integration between NewFi, TradFi. So whether you are a broker dealer, whether you are a custodian, whether you are payment services providers dealing in TradFi or NewFi, we regulate you in the same way. So just an example, today when an exchange wants to offer on-ramp, off-ramp services for cryptos, we regulate them as if they are a traditional financial marketplace. Right? Market abuse, provision supply, AML provision supply, so on and so forth. And I think when we first started off the journey, it was a pretty difficult journey for most incumbents. I mean, when I say incumbents, are the technology firms trying to move into this space, because the bar is very high for them that has never been regulated before to try to even embrace financial regulations. That's a huge thing. The learning curve is very steep. All of a sudden, you have to understand the various concepts of financial regulation. So when we first started off, there was a lot of education to be done. And the ecosystem wasn't developed. We have to speak to banks. We have to speak to federal regulators to explain our framework. So for the firm coming in, I remember back then, out of every 100 firm, we probably only managed to get 5 who are really serious about continuing with the journey. Yeah. So that first mover, so to speak, have not been easy. And we also deliberately took a position that you want to set a high bar from day one. Right?
Yeah.
But I think 7 years hence today, when we look back, it was probably a right decision that we made. We're very careful that whatever we do, we listen intently to the industry, because we believe at the center, whatever we do has to serve the industry. Otherwise, I mean, we have nothing to regulate. So, and I think the larger picture is that regulations are there to make sure there is growth in a sustainable and safe and resilient manner, right? So, because this space is moving so fast, we have no choice but to keep interacting with them, right? Every day, every week, new things start to come in, and we have to think about how to deal with them, right? So that will still be always at the core of philosophy to listen intently and engage. So we do like to see ourselves as a regulator by engagement, because only then you can test out. Or the most important thing for us as a regulator to be credible is that whatever you deliver as a regulatory product out there is made use of by the industry, right? If it's a product that the industry doesn't use, then really you really need to go back to drawing board, right?
Yes, yeah.
So I think that philosophy of engagement has been from day one, and I think the industry appreciates that. Um, I suppose if you have a chance to speak to the industry, uh, if they think that we're doing the right thing, yeah, they won't be shy about telling you. But of course, if we um, are unreasonable or we think that it's something which is detrimental for the development of the center, for firms that have come in, they also have a vested interest to see the center grow. They will be very forthright in telling us where we have done wrong and where we could have done better. The way we approach it is quite different from what you see in other parts of the world. Um, it serves a very important policy tool for us. We were clear from day one. The objective is not so much about helping firms navigate our regulatory requirements. Yes, that's part of it, but the larger picture has to be that it needs to inform us on how to design our policies and framework in a way that will actually support the adoption of innovation. So when we interact with them, if there are no rules and regulations catering to the business model, we'll be very keen to work with them to understand the risks, how we can tweak our rules and regulations to support. Right? Now, but if there's already an existing framework for that firm, typically we will say that, look, we've already got this. So if you want to come in, yes, our mandate is not to help a startup be successful, but there are other considerations for that, including getting the right investors for you to back your business model, right? So we are clear that if there's a framework already in place, please go through that journey of looking at our rules and regulations and complying with it. But where we come across a business model that is so new for us, we are very keen to work with them to see how we can either develop new frameworks or to tweak existing ones. Now, because of that philosophy, and our approach is that we only want to interact with really firms that are so cutting edge and new in terms of our regulatory approach. You find that it is actually a very high touch environment. We actually spend a lot of resources interacting with them, right? And because of that, in our sandbox at any point in time, there's probably one or two at any moment, right? It's not as if we have 5, 10 to deal with. Right? We are very focused in getting just one or two into the sandbox at any point in time. I think it's an art.
It's an art.
Yeah, I really think that's where um, we've been successful in the past doesn't guarantee success in future. So I can easily make a judgment call and get it wrong, right? So the important thing is, I mentioned that we started off with a core team who has who have deep technical expertise. So hopefully you can rely a bit on our judgment calls to make the right calls. But it is also important that we institutionalize that mindset as well as the knowledge along the way. Right? So indeed, I don't think there's hard and fast approach. I do think at the end of the day, we do need to fall back on having that trust that and building that deep technology capabilities and know-how, right? And that only comes through constant interaction. Once the day you decide that I know enough, you don't want to interact, that's it. You lose the edge, right? So, which is why today we continue to take every opportunity to engage with every new business model that comes our way. It might be all over the place, right? But I think it's something which that's the trade-off, right? Yeah. So I think continuing to have the open conversation engagement is probably the key to getting your craft right. I find myself the recruitment process is very important. Recruiting the people with the right mindset. And if I were to sort of prioritize, the first thing I look out for is whether that person has got the technical skill set to complement the team, right? I might not be looking for someone that is that reinforce a person's skill set. I may be looking for someone who has different set of skill sets, right? But I think by and large, my first consideration is always whether the person has got that technical competency, right? And then, so from that perspective, if you ask me, I tend to like to look at those people who have regulatory knowledge to begin with, right? So because the regulatory know-how takes years to develop, and it's not as if you can just shortchange it. So my guiding principle is first look at people with the knowledge, with a technical background, and then from there, during the interview process, I always suss out whether they are prepared to create impact. They have a vision for the center. They're not here just to pursue a career or just looking at doing things same old, same old. I want them to think of being thought leaders themselves. That if you come here, I'm going to give you the space. You must be able to grab it and run with it. So it is a kind of mentality. I would prefer to hire someone who the challenge is for me to rein them in as opposed to having to kick them to move. Right? So I think to recap, I suppose, deep capabilities, technical skill set, with that mindset of willing to be open-minded and try new things. So when we have to grapple with this issue, one of the debate was whether they are deemed as payment tokens or investment tokens, right? Because under an investment lens, you are supposed to put in place the appropriate investment-related safeguards. Whereas if it's just a pure means of payments, it's just like any other payment services or payments wallets, right? So for us, we think both can work because if a stable coin is able to have an effective store of value, definitely it can be used as a means of payments, right? So stable coins have the effective store of value, right? So yes, we want to be able to let them use it as a payment token. But if there's an opportunity for some of these savings arising from your reserve assets, if you are able to pass on some of these savings to the user from a financial inclusion perspective, is why not, right? And we are very careful that in terms of not being seen as an investment product, is that yes, it is primarily a means of payments, right? Any yield that you want to pass on to the holder, it cannot be a guaranteed product, right? It has to be, if I've additional yields and savings, I will pass on our goodwill to the holder. So the holder does not expect the yield to happen, right? But if you keep it and if there is indeed yield that is generated out of it, I don't think I should stop the intermediary from passing on those savings. So it is from that angle that I think the two can coexist. At the end of the day, it's a business model that is determined by the issuer themselves, right? If they want to purely use it as a payment token, right, they keep all the use to themselves. That's one model which our framework can cater, right? But there are also intermediaries, and there are also issuers that think that yes, there are individuals that are underserved, whether it's from a banking perspective or whether it's from an investment account perspective. We think that it is, for us as a regulator, something worthwhile supporting as well. Yeah. So I suppose the challenge for us is to make sure that in terms of designing our rules and regulations, depending on the perspective that the holder is adopting, we need to make sure that those risks and those safeguards cater to each different profile of users. That is a very, very important part of our recent debt, because we need to be plugged into the global developments. Digital finance is really boundaryless, and the only way to make sure that you know there are no regulatory arbitrage or the risk does not build in the financial system is really through such platforms. We see ourselves as a responsible citizen in adopting the best in class that the standard setting bodies have put forth. So that platform allows for conversation in dealing with effectively dealing with cross-border issues. Where we might find a bit of deviation is, of course, certain regulators might move faster, or some regulations might have different priorities, right? So you can never always have regulatory convergence, right? Because every jurisdiction's circumstances are different. So in our jurisdiction, we happen to believe that digital assets is something which is bound to come. There's going to be conversions of TradFi and NewFi, so we must get ready for it. But do we then wait for the rest of the world to decide that that is the way to go? We think we want to exercise a bit of discretion there to cater to the risks that's building out in our center, right? Because there are players coming in there. So we must do the right thing in terms of starting to mitigate the risks. But we are always attuned to what's happening internationally, because only then can we make sure that there's no regulatory arbitrage, and only then can we make sure that other regulators, when they work with us, they know that our outcome will always be aligned in terms of investor protection, in terms of safeguarding the financial stability of the system. Would love to be able to demonstrate to the world that there are various ways that we as a regulator can adopt to arrive at the same outcome, right? So if technology can help us achieve a better outcome, then we should be prepared to try. I would one day love a conversation where, oh, we have done it in this way, but in terms of regulatory outcome, I think it probably achieves the same, right? And hopefully better. And to be able to walk the talk with the kind of vision, with the kind of outcome they want to achieve, I think it's something which not many jurisdictions or not many individuals would have the chance to experience. So if you ask me how I would see ADGM in future, I like that ADGM will one day be in the minds of people, a thought leader in financial regulation, doing things and demonstrating that the regulatory outcomes, objectives can be met, but not necessarily in a way that will hinder growth and put more burden on the industry.